Today we're talking about avalanches. Wasn't that crazy, Tails? But you're probably thinking, right? What is this guy crazy? We're talking about Avalanche, the cryptocurrency, and the AVAX token. The State of Avalanche. Everything you need to know about that token right now to get up to speed on that. And also, here's Tails, the cutest pup in the world. My name is Vosk. Let's dig into it. My name is Voskcoin on the Voskcoin YouTube channel. Nothing in this video is financial advice, and huge shout out to Messari for compiling most of the data that we're going to break down today in State of the Avalanche report. I'll link that out down below. Read along with me and refer back to it at your leisure. They didn't sponsor this or anything like that. I just thought it was a good report. I wanted to turn it into a video format and put my spin on it. So let's just jump into it, right? AVAX. Avalanche in the AVAX token. The last quarter lacked quantitative excitement found in bull markets, but it was a quarter focused on building Avalanche's infrastructure and execution of strategy. As we run through these initial key insights, right? Integrations with Core, Thorchain, Boba Network, and other protocols enhanced user access and experience. The ecosystem expanded beyond DeFi, which is decentralized finance, and ushered in renewed NFT, non-fungible token activity, real-world assets, and GameFi, as well as unique use cases like film finance offerings. FFOs, we do it all in the crypto sector. With advancements in network functionality such as those with configurable fees and elastic subnets, the value proposition of subnets continued to advance. Subnets on the Fuji testnet will begin transitioning onto the Avalanche mainnet. The expansion of the P-chain validator set and ecosystem should accompany this migration. Significant technological advancements like BAMF on the horizon are expected to catalyze growth. So, initial interpretation of just these key insights, it's a very technical chain in a technical piece of its life, right? You look at Ethereum and they're not talking like this, kind of because all these technical developments more or less already happened, and it's less just notable, right? So get ready for one more technical piece, and then we'll really start to dive in and break this report down. But it's a simple primer on Avalanche. So the Avalanche Network is POS. It's a proof of stake, man. Smart contract platform for decentralized applications. It differentiates itself by creating and implementing a new consensus family known as Avalanche Consensus, like a self-titled EP. Following years of research, the Avalanche mainnet was launched in September 2020. It features the release of multi-chain framework utilizing 3 chains, PX and C-chains. Each chain plays a critical and unique role within the Avalanche ecosystem, providing the same capabilities of a single network, often called the primary network. Avalanche Consensus and the primary network are designed to support sovereign interconnected blockchains known as subnets. Subnets are subclasses of the primary network, validators that run the same virtual machines. Stick with me. They provide the ability to create custom blockchains for different use cases while isolating high traffic applications from congesting activity on the primary network. So, to kind of put it simply, they're trying to take the best pieces of some other chains, their own development, splice it all together, and bring a actual useful blockchain conglomeration, if you will, to market. I was very excited for Avalanche last year, but when things really heated up, fees got pretty expensive on that chain. And I found that very disappointing, because until we get to, even when chains are the most congested, we're only still paying cents, preferably less than cents, microcents, right? We're not gonna make it. Looking at the narrative for Avalanche in the last quarter, it focused on its vision to digitize all assets, enhance the network's capability, and scale horizontally through architectural design and subnets. It improved user access with Core, a Web3 operating system. This ecosystem continued to expand into DeFi and beyond with the rollout of NFT marketplaces like Trader Joe's, JoePegs, and GameFi developments. Ultimately, it was a continuation of development for the Avalanche ecosystem, with the network maintaining its focus on the long term. It lacked, again, that quantitative excitement witnessed during last year's bull market. But the bear has surfaced. Looking at the key data takeaways here, network value increased slightly by 3.3% in the last quarter, but usage and revenue generation dramatically declined. Not really a surprise. Average daily transactions declined by a whopping 66%, with a welcomed 76% decline in transaction fees. Total revenue declined by 94%. From a valuation perspective, the relationship between network value and revenue, price to sales, P/S ratio, continued to reverse course, moving from 379x to 665x. Looking at the daily active address growth here, daily active addresses continued to reverse course. The address activity averaging 38,000 per day, down from an average of 63,000 per day in the previous quarter. Outside of the C-chain, daily active addresses on the DeFi kingdoms and Krabata subnets experienced an uptrend. The address activity on DFK and Swimmer subnets, Swimmer would be Krabata here, and DeFi Kingdoms would be DFK, reflects usage that would have been previously captured on the C-chain. Nonetheless, the amount of address activity on the C-chain is still 4 times greater than a year prior. The growth in activity on the subnets indicates healthy subnet functionality. And just to make sure you know, their CNET is basically their MetaMask implementation, right? For example, if we pull up Trader Joe XYZ, and I will come over here and I'll click on my networks. I already have all this input there. I'll go over to the Avalanche mainnet C-chain. It's EVM, Ethereum virtual machine compatible. You connect with MetaMask. You have the drop down in MetaMask. And let me try this one again. A little refresh. You can see I'm connected here. Trader Joe XYZ, interesting, right? I think it's an awful name. Branding's not that great, but they just had that first mover like advantage in it, and it's been functional. It's been a good service to use. So just to make a quick, just trade for fun here, right? So just a tiny amount of AVAX, and I'll convert it to a whopping 0.16 USDC. Hold on, we got an update on the price. So let's see how much this cost me. I confirm the transaction, I pull it up on Snowtrace, see how fast this goes through. Pretty quickly right there, which is great. And obviously, it was a dumb transaction. I moved 2 cents at the cost of 7 cents. 7 cents is acceptable, definitely, for a transaction fee. But, it's much more expensive than another blockchain like Arbitrum, which I'm pretty excited about. Arbitrum also has an incoming token airdrop that pretty much everyone in crypto who's paying attention knows about. It's not too late to get involved over there. Watch our videos on how to become eligible, things to do, things to look out for, and really just why it's such an interesting chain, which is why it's booming. They have technological advancements that are just pushing them ahead, and I don't have a stake. The token isn't even out yet when I'm recording this, right? I'm not in some seed round. Nobody paid me. There's always so many conspiracy theories done in comments, whatever. And I don't hate Avalanche, just to be clear. I like Avalanche. I'm excited for Avalanche. I want to see where they go. And I hope that their token continues to trend down in price. And I'm going to buy a big bag of it. And next bull run, I'm going to have a really good time. Anyway, getting a little bit off topic, I just wanted to show you, illustrate that C-chain aspect for you, if you're not familiar. And, it's, again, the last thing I'll say, this is basically their version of Ethereum, right? Their Ethereum mainnet. Trader Joe XYZ is the Uniswap of the Avalanche blockchain. So there you go. Let's look at the Avalanche network value and daily revenue here, right? As a result of the burning mechanism, the growth or decline of C-chain revenue influences AVAX's market value upwards and downwards. Evidence throughout the last year, spikes and declines in daily revenue have been accompanied by spikes and declines in fully diluted valuation, FDV. As the relationship between revenue and network value persists, network usage and revenue on the C-chain will continue to impact network value. Kind of obviously, naturally, I guess we'd expect that, right? Subnets have clearly put a downward pressure on revenue to some extent, network value over the short term. The relationship between revenue and value continues to beg the question of whether subnets negatively impact the utility of the AVAX token and the Avalanche primary network C-chain value. To put it simply, I think it does. For now. The concern when it comes to crypto tokens is really their utility, right? Maybe you have a great chain, but the token sucks. How far up are we really going to drag that token in price if that's the case? Again, subnets are not only an approach to scaling the entire network, they are a value proposition for developers. These allow decentralized applications to leverage the Avalanche consensus and infrastructure. They allow devs to easily spin up uniquely tailored blockchain environments. Evaluating quantitative metrics to the primary network, there is an opportunity cost that cannot be easily quantified. Would DeFi Kingdoms and Krabata have ever built on Avalanche and generated activity on the C-chain in the first place without subnets as their endgame solution? Perhaps they would have found a different solution if that was the case. Interesting point there. Each subnet stakes 2,000 AVAX tokens and validates on the primary network. So there is that case, there is that push. And how much does 2,000 of these tokens cost? Let's head over to CoinGecko, 17th biggest cryptocurrency when ranked by CoinMarketCap right now. And to spin up one of those validators is going to cost you a cool 32 grand. Kind of reminds me of the Ethereum validator costs. Interesting copy and paste there. Obviously there's big variables there, but it is kind of a fun comparison right now. Other value accrual mechanisms include the AVAX fee for creating new subnets and blockchains. This fee allows AVAX to capture value indirectly through its burning mechanism. Other value may come from the need of AVAX liquidity on subnets and utilizing AVAX. You like AVAX or AVAX? Which one do you prefer? Or AVAX? Or is it AVA and the X is silent? I don't know. You decide. You know, it's Burger King. Have it your way. Okay? So, eventual cross-net subnet communication. Finally, subnets could choose to use AVAX as their native tokens. So this would be great for Avalanche, but I would never do this as a developer. I would utilize my own token as the native token, if possible, in this type of deployment. That's just kind of a no-brainer, in my opinion. For major projects, for smaller projects, it could make much more sense to actually utilize that, making it easier for, you're decreasing that barrier to entry. People already have that token. Get in, get out, use a service, whatever. But if you're building something like a game, right, and you really want to drive home that token use case and use for this and that, whatever, well, then you would use your own token. DeFi Kingdoms, for example. The interesting development with Avalanche is the C-chain aspect and in conjunction with the subnets, right? And the takeaway for me is some developers or applications are building on the C-chain first and then migrating to their own subnet. Example, again, DFK and Krabata. Ultimately, each has its own trade-offs and things like that, but that is like a fun way to build on the C-chain, get everything set, build that core user base, and then be like, we're going to our own subnet, yeah! It is exciting. And hey, it's another little dot on the roadmap, and it can, again, definitely help you get more users up front and then bring them to a core ecosystem where you can further refine and also reduce fees. Let's look at that TVL. How much total value you got locked? Avalanche's DeFi incentive program, Avalanche Rush, wound down over the last quarter. TVL, total value locked, fell roughly 27% in both USD and AVAX quarter over quarter. However, over the 12 months of the Avalanche Rush program, the average amount of TVL denominated in AVAX was 126 million, which was roughly the average throughout the last quarter. From this perspective, TVL in AVAX is stable as TVL reverts back to its mean. It reflects a sustainable utility instead of a value catalyzed purely by incentives, which is good. That is a very healthy sign of this layer 1 protocol. Avalanche is a layer 1. It's basically a direct competitor to Ethereum, which is also a layer 1. To compare a layer 1 to a layer 2 would be like Optimism or Arbitrum built on top of Ethereum using optimistic rollups, among some other developments. During the last quarter, Avalanche's two prominent lending protocols, Aave and Benki, saw their TVLs move in opposite directions. Aave dipped roughly in line with the Avalanche DeFi ecosystem as a whole, minus 30%. However, Benki increased by 13%. Benki's growth can be attributed to its recent liquid staking offering, as the TVL in its lending platform was flat quarter over quarter. Overall, TVL declined. Dominance didn't shift much between the top protocols. The broader DeFi ecosystem was able to stabilize thanks to the growth in TVL of other relatively new projects in the Avalanche ecosystem, namely Synapse, Stargate, and GMX. 139%, 14%, 6% respectively there. Beyond existing DeFi, Avalanche has made a clear effort to bring on real-world assets. I have a new acronym, RWAs here to remember. Centrifuge, an on-chain ecosystem for RWA structured credit, announced the integration of its Centrifuge connectors with Avalanche. These connectors create a hybrid cross-chain solution to bring, again, real-world assets from Centrifuge directly to Avalanche. So, woo, here we go. Keep up. Intane, $5 billion in assets on Hyperledger, building on Avalanche. KKR and Co. plan to tokenize part of the healthcare strategic growth fund. We'll see how that goes. A lot of that stuff ends up as headlines, and let's evaluate it if something interesting actually happens. But it's good. It's cool. It's good. It's good news nonetheless. NFTs, Avalanche NFT activity. The downturn in TVL wasn't isolated to DeFi. Avalanche's nascent NFT market experienced declines in secondary volumes. Down 89%. Unique buyers down 34%. Unique sellers increased by 25%. Any way you look at this, it's bearish. However, NFC sales rebounded in the beginning of the last quarter. Average daily sales in June were 25,000, followed by an average of 70,000 in July. That's actually really crazy of a 180% bounce from the lows there. However, much of that rebound is attributed to JPEG's NFT marketplace and the subsequent sale of Conscious Lines, which sold out in 30 seconds and gathered the interest of buyers such as That's Hot, Paris Hilton, and her Taco Bell loving Chihuahua.
You love me very much, don't you? How much you love me?
Me personally, I'm super bearish on NFTs right now. Unless it's like a really long-term, unless it's associated with something that's been here a while and will be here a while. But just, random NFTs popping up here and there, I think we still got plenty of time to review and evaluate and look for the next CryptoPunk and the next Bored Ape, which will continue to be harder and harder because CryptoPunks is, famous for being an OG project, and Bored Ape just, hit that crazy viral marketing spin and pickup, celebrity endorsement, and that was really, again, another outlier, which is reflected in its price point. Not that there's not going to be another one, but don't think it's easy to find and figure out. And then even if you can figure it out, are you going to justify that initial buy-in? Because, as always, NFTs, are worth ridiculous money or worth like $10. As always, time reveals all. Moving forward, though, DeFi incentives have slowed with Avalanche. Looking at their gaming, though, Blizzard. Luckily, not Blizzard Activision. Warcraft 3, best game of all time. Blizzard, worst company of all time, long term. Don't get me started. Avalanche's $200 million ecosystem fund is still in motion and attracting creatives in GameFi, along with RWAs. GameFi is clearly starting to find its place in Avalanche's ecosystem. Heading into the next quarter here, Razer, a gaming company with a robust gamer-focused ecosystem of hardware, software, and services, partnered with Shrapnel. Shrapnel is a AAA first-person shooter built on Avalanche by a team of backgrounds with Halo, Call of Duty, and HBO. I'm using a Razer mouse and keyboard right now. Steve Harvey, celebrity host of Family Feud, announced his entry into the world of play-to-earn gaming on Avalanche, allowing players to receive rewards in the form of NFTs. Beyond Razer, Shrapnel, Steve Harvey, and a slew of games, including Cosmic Universe, migrating from Harmony, Open Blocks, and Domi Online, are some of the other notable GameFi players entering the Avalanche ecosystem. Honestly, that's pretty cool. It's pretty exciting. It's interesting. I want to see where it goes. Let's look at the Avalanche ecosystem developer involvement here. Development engagement measured by unique smart contract verification is yet to catch up to progress seen in RWAs and GameFi. Smart contract verification is triggered by the developer to translate the code into a higher level language. This measure followed a similar pattern to most other quantifiable metrics quarter over quarter, quarterly down total 20%. However, this kind of data is tough to crunch. Not all commits are created equal. Looking at GitHub activity and things like that, it's say roughly is down 20%, matching quarter over quarter. Let's see where it goes. Some people are still there. Some people are still developing. That's more or less the takeaway. Looking at staking and decentralized of the network, it remained strong despite coming off a volatile previous quarter. Average daily stake amounts and engaged stake were relatively flat quarter over quarter. The total amount staked grew from 243 million AVAX to over 260 million. The validator stake remained 6.5 times greater than the amount of delegated stake, and the unresponsive validator stake was also flat, which signals continued engagement, reliability, and network health. Good, positive, long-term things, right? Unlike average stakes amount, there was a significant shift in the average number of validators and delegators. The average validator count shrank from 1,465 to 1,273, representing a 13% decline in network security participants. Disappointing. Given the incoming subnets over the near term, the average number of validators should increase in tandem with the amount of AVAX staked. I do want to compare this with proof of work. Bitcoin just hit an all-time high network hash rate, which is basically more participants. I know a miner is not also a node. I would love if they were. But Bitcoin is nowhere near its all-time high price. So I just a little biased insert, if you will, right there. And just so there's no discrepancies, I'm building a Bitcoin farm. It's not why I'm telling you about it. The more people that participate, I earn less Bitcoins, okay? So anyway, moving forward. In the end, the continuation, low volatility in stake, validator, and delegator counts signals a healthy network and progress toward greater decentralization. Avalanche Nakamoto coefficient. This represents the minimum number of validators needed to compromise Avalanche security. Good news is, the coefficient continues to hover around 30, slowly improving over the long term. This is a good thing. It's remained stable. It's remained in a healthy zone. And I hope that they achieve further security and decentralization the best they can with a proof of stake blockchain consensus mechanism. Let's look at that competitive analysis. Zoom in. Looking at the C-chain metrics versus EVM chains, Avalanche, Ethereum, BNB chain, Polygon, Phantom. Active validators, significantly higher than 3 of the other chains proposed here, dwarfed by Ethereum. That's okay. That's to be expected. When you actually compare their market caps, Avalanche is doing just fine compared to Ethereum and their validator metrics. Look at the total revenue, down 94%, 78%, 41, 15, 94. Basically, terrible performance right there. Average transaction fees down significantly. NFT secondary sales are down more than any other chain that's compared in this chart. Average daily core developer activity is looking healthy compared to its competitors. The total value locked decreased 27%, while Ethereum increased, BNB chain increased, Polygon Matic decreased at about half as much, and Phantom did worse as well, and Phantom just kind of continues to crumble. That's a quick takeaway on that competitive analysis. Avalanche valuation up and down throughout the quarter, finishing relatively flat. Decrease in average transaction fees and daily transactions. Significant downtrend there. Peers experienced something similar. Over the quarter, their PS ratio increased more dramatically compared to the peer group. The change in PS gauges the protocol's revenue and gives a sense of the number and price of transactions processed by the protocol. Ethereum's increase in PS was not due to fewer transactions, but instead from lower transaction fees, which is generally accepted as a good thing. On the other hand, Avalanche experienced decline in transaction fees and daily transactions, making its increase much more dramatic. On a relative basis, AVAX is now more expensive per unit of revenue compared to the peer group. Looking at the average transactions here, similar level of daily transactions compared to Ethereum throughout Q1 and earlier part of Q2. Much of DFK and Swimmer subnets, daily transactions on the C-chain experienced a sharp decline. Ethereum has held steady at about 1.15 million transactions per day, Avalanche reaching as much as 74% of Ethereum's volume earlier this year, but now hovers close to 20%. Interestingly, though, collectively, Avalanche's infrastructure in its entirety is currently processing 2.3 million transactions per day. That's more. Last quarter was flat for crypto DeFi market, with aggregate TVL beginning and ending with 54 billion in USD terms. Avalanche's TVL declined at the second greatest rate among the top EVM chains here. Phantom, shedding, shredding, tearing apart the seams. Somebody get corn on the line. Avalanche was on a path to establishing a strong position relative to a peer group of top L1s, Layer 1s, by all-time secondary NFT sales volumes. Avalanche quickly surpassed Ronin, Flow, and Polygon during Q1 and the early part of Q2. Secondary sales dropped in May, and around that time the Swimmer Subnet launched. Nonetheless, Avalanche NFT rebounded in Q3, again, largely thanks to, really entirely thanks to JPEGs, among a few other NFT launches. Quantitative narratives of the last quarter relatively unexciting, as it was for many networks in this bearish market. Q3's qualitative narrative was filled with building the Avalanche ecosystem and remaining laser focused on executing its growth strategy. As earlier mentioned, the protocol made significant strides by deploying Blizzard and other efforts to usher in real-world assets and GameFi. Technical integrations, core technical enhancements, improved user experience, including user access, advancement into unique sectors and use cases, niche deployments like that, I honestly think are really cool and can really drive some just long-term growth, health, and viability. It's great that Thorchain integrated Avalanche C-chain. Infera, a widely used toolkit for blockchain developers, announced its support for C-chain. Great news. Rome Blockchain's lab bringing the liquid staking standard to Avalanche. What will be interesting to watch is how this platform will be governed in a decentralized manner, yet offer a standard for Know Your Customer KYC and anti-money laundering AML requirements for institutions with regulatory obligations. Core technical enhancements rolled out, configurable fees for subnets introduced, launch of the subnet EVM there, unique use case beginning to surface with the landslide network, a subnet aimed at decreasing the finality of tendermint consensus. Now, this ain't about swiping left or right or up or whatever. Technical integrations continued. Core, the non-custodial Web3 browser extension, rolled out support for all blockchains that run EVM and custom subnets. This integration allows seamless switching across all blockchains, including Ethereum and Bitcoin, as demonstrated at the Avalanche House Brooklyn. QuickNode made it possible for builders to launch a node within seconds using their global network of RPC endpoints. Liquid staking solutions brought more user access. GoGoPool, a new staking protocol, raised $5 million in a seed round to bring liquid staking to Avalanche. More unique use cases continue to surface. Curate DAO launched an Avalanche-based Curate to Earn Pinterest-like database platform where participants can earn by contributing to the database. And then we had Republic bringing the first tokenized FFOs to Avalanche Film Finance offerings. Another notable integration was the Boba Network, a Layer 2 scaling solution, Avalanche's C-chain's first Layer 2. This integration gives Avalanche developers another means to low fees, speed, and scaling. It's interesting, but if we have an alternative, better Layer 1, I mean, how many layers are we going to deal with? I got 29 Layer 1s, 41 Layer 2s. As a user and consumer, like it does get old, it does get overwhelming. I don't mean to take away from this. This is cool and exciting, but on the other hand, I'm like, another thing to do and learn. I do this all day, every day, and I'm still lost in the sauce. If you're doing this after work, it's an endeavor. Most notable event of the last month was Avalanche Go upgrade that brings elastic subnets to the ecosystem. Bam! Double F, baby. It will enable subnet creators to activate proof-of-stake validation and uptime-based rewards. Cool. Looking at the challenges they faced, rollout of Apricot 6 requires some attention, which is one of their technical upgrades. Mandatory security upgrade caused an uptick in unresponsive validators, but it was not enough to put the network at risk. Avalanche Bridge experienced some instability with bridge nodes. Transfers were not processed until the issue was resolved. Bridge nodes ran maintenance and were quickly updated to the latest Avalanche Go release. Beyond the impact of upgrade maintenance, a vulnerability was found and addressed during the quarter. Native asset call precompile, a unique feature exclusively on the C-chain used to interact with Avalanche native tokens, was at risk of being exploited. The vulnerability was quickly addressed as all Avalanche contracts open to the potential exploit were disabled. Avalanche Go v190 will entirely deprecate, not defecate. The precompile introduced a safer replacement to restore full functionality for Avalanche native tokens on the C-chain. Avalanche doesn't maintain a publicly viewable roadmap, but clearly they are focused on the future moving forward. Over the coming months, many of the subnets on the Fuji testnet will begin transitioning onto the mainnet. Expect an expansion of the P-chain validator set to accompany this migration. Avalanche's apricot upgrade phase is complete. The BANF upgrade cycle will ramp up. BANF will unlock value across the Avalanche ecosystem in terms of interoperability, similar to the completion of IBC on Cosmos. It will allow cross-subnet asset transfers, permissionless subnets, and subnet validator rewards in their native tokens. Honestly, very cool right there. Easy to kind of get lost in the sauce with everything we've been reading today, but so this upgrade, right, allows cross-subnet asset transfers, permissionless subnets, subnet validated rewards in their native tokens. That's cool as f***. Avalanche incentive programs may continue to catalyze ecosystem growth. Significant technological advancement like BANF are expected to catalyze growth soon. Look at the closing summary here. Quarter building and executing strategy and vision lack the quantitative excitement witnessed during a bull run. Naturally, bear is for the building. Simple as that. And they have some good integrations that are building them up and pushing them forward. Incentive program may continue. Depending on how they continue with the incentive program, will push more growth in the ecosystem. I'm interested. I'm all about it. I love incentive programs, and I know many other people do as well. Keep in mind, I'm the pleb that made nothing from this YouTube video other than a little bit of ad revenue, and if we have some kind of sponsor segment. They were commissioned by Avalabs, a member of the protocol services, to produce this. It's good research. I don't think it's, really swayed for them. It's mostly data, and from data we can form our own opinions. Of course, they integrate some of their opinions, the authors, specifically James Troutman here, but we've put our spin on it the entire way as well, for better and worse. Pulling up, a couple data points here as we close this out. We see transactions every couple seconds taking place on this network, along with blocks matching that. We see the unique address chart. We see that it was, very, 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 very slow start. Really boomed at the end of 2021 and in early 2022. And it's been slowing down, but still maintaining steady growth. And it doesn't even seem that we've seen a day here. There's one. We've seen one day where they didn't gain more than 2,000 addresses per day. Looking at the C-chain daily transactions, we see this very stark drop-off. But again, most of those, or that big drop-off, is attributed to many of these transactions being moved to the subnets. So this is a little bit harder to judge, given that subnet activity. Looking at their top statistics over the last 7 days here on Snowtrace, which is basically the Etherscan version for Avalanche. Nothing too crazy. People out here loving USDC. Hope you're not using Tornado Cash. Top token action here, other than wrapped AVAX, WX. I can't even speak anymore. I'm feeling like Jim Carrey up in here. Where's the mask? Smoking. Top transaction count received is Mr. Trader Joe and his router. Man, I hope he's got good internet service. It's a joke. I know it's not that kind of router. All right? Jeez. For me personally, I love layer 1s. I love layer 2s. I love platforms. In bearish conditions, I look to build bags of platforms, of blockchains. And that really was also one of the narratives even in the last bull cycle. But, you look at these chains and you look at Phantom, and Phantom is probably the worst top EVM chain Ethereum competitor to invest in right now. That means that it will either be a huge moonshot next cycle or just absolute garbage. You look at something like Avalanche, and in my opinion, it looks like a much safer bet. We look at the price points, and we see that it's down 89% from its all-time high that was just 11 months ago. That's not that long ago. And it's only up 473% from its all-time low 2 years ago. I look at those metrics. I look at a market cap here of less than 5 billion. And I'm like, sweet, I look at this stuff, I'm like, this is probably going to be a 10x, 20x, maybe if it goes crazy a little bit more. I want to get involved with these chains. I want to get on chain. I want to, use these dApps, these decentralized applications. I want to be in the next exciting NFT. And I want a bag of these tokens. And when the next cycle heats up and this thing really, gets hot and goes up a lot in value, I'm dumping it. I'm dumping the majority of it. But I'll also be familiar with the chain, and I'll be hopefully interacting, making the right trades with other new tokens that are only on that chain, interacting with these other, dApps and other things that could give me unique airdrops, NFT exposure, or maybe even just do some play to earn game and have some fun and earn some tokens along the way. That's me personally. I'm a total nerd with this stuff. I love it. I live it every day. Let me know your thoughts down in the comments below. Thank you so much for watching. And of course, I'll drop links down to the things I showed on the screen in today's video down in the video description below. I'll see you in the next one.